What's going on, everybody, and welcome to your weekend briefing for the week starting May the 2nd. In today's show, we're going to look at another big week for earnings with probably the single most important company reporting. We got some very important economic reports this week, including the FOMC, so we'll talk about that, of course. First Republic is probably going to fail. Maybe it already has by the time you watch this. We've got lots of charts to look at to get a feel for the markets. We'll look at how some of the setups we've been playing are doing and see if we made any money or not. And we've even got some new setups to look at. So, by the way, why don't you go smash that like button if you like what we do here. We put a lot of work in these videos and it really helps us out. And if you're wondering who I am, my name is Kevin D. And I'm here to help you make sense of all of this. So we do these videos every week to help our members stay up to date on what's going on in the markets and highlight fresh opportunities. We have a really cool community of like-minded traders and investors, and members get to take part in live streams and live mentoring sessions. So check it out in the link down below. We'd love to have you come join us in the Discord. All right, here's a quick disclaimer. Everything we do is our educational purposes only. We're not investment advisors, do not provide investment advice, and all investment and trading decisions are your own and done at your own risk. All right, let's dig into this here. We've got lots of earnings, as you can see, this week. So we kick off on Monday morning before the open with SoFi. Probably unlikely to move markets much, but I know that this is a favorite with retail traders, so it will be very closely watched. Norwegian Cruise Lines, probably somewhat important. I think we've already seen a cruise line or two, so shouldn't be any really big moves there. MGM Resorts, possibly interesting. I think more interesting maybe on Monday after the close is MicroStrategy. And we've actually got a potential crypto play for us to take a look at, crypto or blockchain, whatever you want to call it. We'll look at that later in the video. And on Tuesday before the open, Uber, of course, will be very closely watched. Pfizer, pretty important. Marriott, fairly important. After the close, AMD will, of course, be very closely watched and can certainly move markets. Ford's an important company with earnings coming, and Starbucks, maybe not as important as it used to be. Starbucks used to be able to move markets. I'm not sure if it can anymore. On Wednesday before the open, we have CVS. Some other kind of second-tier names. On Wednesday after the close, Qualcomm, pretty important. And a bunch of second-tier names, but I could have highlighted every one of these just about. SolarEdge, we're going to look at a couple of solar plays. I didn't want to pick SolarEdge because, they've got earnings coming. But we've got a couple others that we should take a look at. Mercado Libre, I know that a lot of people like this, and this is, gives us an important clue into what's going on in Latin America. Sunrun, another solar company, Fastly, Etsy, Marathon Oil. So you can see there's a lot of names worth watching. Maybe not market-moving names, but they're definitely worth watching, most of these names. On Thursday before the open, we've got Datadog, Royal Caribbean, probably a more important cruise line than Norwegian. So that's also on Thursday before the open. Moderna, goes without saying that that's an important name. Although not as important, now that COVID's pretty much done. Peloton, will they survive? This should be interesting and maybe worth a quick little play, but is anybody still invested in that company? All right, let's move on to Thursday after the close because it's huge. And it starts with the biggest of all, Apple. This is going to either crush the market or send it rallying huge, perhaps even to new highs. And we'll take a look at the charts and we'll talk about that more when we look at these charts and the potential for it. But whatever Apple does, that's what the market's going to do. So obviously we want to see Apple crush their earnings, and that way the market will not get crushed. Spotify, another important company coming on Thursday after the close. Block, Square. Calling it Block. Square, pretty important. Coinbase, important for the crypto industry. DraftKings, important for the gambling industry. Lyft, maybe not so. I actually probably shouldn't have highlighted this. This one is starting to definitely lose its luster. And after we have earnings on Tuesday, there probably shouldn't be any huge surprises for Lyft. Lyft is, between Tuesday and Thursday is going to be doing whatever Uber does. And Carvana is one that is fairly closely watched. Friday before the open, we have AMC, one of the meme stocks. And that's about all that's fairly important on Friday. So there you go. Another big week, obviously. Tons of stuff here, tons of stuff going on. I'm sure you have some of these companies in your investment portfolio. All right, coming up on the macroeconomic stage this week, on Monday we have the ISM Manufacturing PMI. This is important. These PMIs have actually been sort of leading the way a little bit, and they're one of our bullish signals. They're one of the signals that's saying, hey, the economy's actually doing well, and it's maybe not inflationary. It's, they're saying that maybe there won't be a recession. If there is a recession, it's going to be really shallow. So we'll see if we get more confirmation of that from this manufacturing PMI on Monday. On Tuesday, we have our first look at jobs in a week that is very important for jobs. We have the JOLTS job openings on Tuesday. On Wednesday, we have the ISM Services PMI, and again, something we look to get hints on inflation and the health of the economy. And of course, on Wednesday is the biggie for the week, the FOMC rate statement. We're expecting 25 basis point rate hike. We'll look at that in a sec. And Jay Powell's press conference. So that's always fun. And so in the rate statement and the press conference, we're going to get to see how do they feel about rates going forward. Do they, as the market sort of suggests, do they think that this is enough for now and they're going to pause? Or will there be another hike? And I think with some of the data we've seen recently, in the last week and a half, while they've been in their quiet period, some of that data suggests that maybe there could be another hike in either June or July. Let's take a look at our FedWatch tool. So we can see for Wednesday's meeting, we have an 84% probability of a 25 basis point rate hike. So right now we are at 475 to 500, and you can see that we're expecting to move to 500 to 525. I expect that these probabilities will move even higher, as we move into Wednesday. All right, so that's what we're expecting. No surprises there at all. I think though, and what worries me a little bit, and it could lead to a little bit of downside in the market. I think that these probabilities of the rate staying the same. So you've only got a 27% probability of the rate going higher. You've got 11% probability of the rate going lower at the June meeting. I don't know, man. I'm not buying this. I think that the probabilities of a higher rate in June of another 25 basis point rate hike should be higher than this. And if the FOMC comes out and says, we're not sure, if they suggest that maybe there could be another rate hike in June, I think we're going to see the market react negatively to that. So that's something to watch out for on Wednesday. Let's go back to our data here. So on Thursday, unemployment claims as always. On Friday, very important, we have non-farm payrolls. It's a big number. That the Fed wants to see this jobs data weakening a bit. The market probably doesn't want to see that so much. If this jobs data weakens too much, market's going to get afraid that a recession is coming. So we really got to nail the Goldilocks zone on that. Also remember that Apple's reporting Thursday after the close. So, I'm kind of like, I got to flip a coin and decide what's more important, Apple or these non-farm payrolls. And I'm kind of leaning towards Apple's earnings. But we'll see. You know, if these non-farm payrolls, though, could reinforce whatever move is happening after Apple's earnings, or could mute it if they kind of go opposite ways. So we definitely have to watch for this before the open on Friday. And then a little later on Friday, and I've never seen this one before, probably because nobody's really cared about this since, well, I guess COVID maybe, but 2008, is the FOMC Financial Stability Report. This comes out twice a year, and as the name suggests, it's a report that measures the stability of the financial system. It looks for imbalances in the financial system. It looks for areas where there could be danger. So this is interesting. And something probably worth watching, and I would not be at all surprised if the market moves on this, if there's any surprises in there. This is data we need to know. Considering the financial crisis is kind of moving into part 2 with the FRC, which we'll talk about in a little bit. All right, we're going to look at the major indices now, or look at the markets overall, starting with major indices, international markets, commodities, of course, sectors, and our setups. So let's dig right into this. First, actually, let's start with our regime tracker, our short-term trend tracker. And we can see we were back up into the bull chop area here. So we are, bullish. We do have a slight but choppy uptrend. We got all the way down. And last week's video, I think we were at 1 or 2. But during the week, we got all the way down to -1 after Wednesday's close. But have moved really quickly back up into this zone. And I suspect are going to be moving into even higher into this strongly bullish trend area. Let's move on to our markets. Start with taking a look at the SPY, the S&P 500 ETF. And you can see we've had a volatile week. We had Tuesday, Wednesday, big red days. Was not looking good there, mostly on earnings. And then Thursday, again, kind of on earnings and a GDP report that was okay. We had strong moves up Thursday, Friday, and you can see that we've gotten through a minor resistance level, and we're moving into this zone where there's a lot of gaps. Now, we could move fairly quickly through here, but, I don't know. Can we move fairly quickly through there before Wednesday, though? Before the FOMC? And I don't think so. I don't think there's big enough companies reporting before that to really move us through there quickly. I think that FOMC or the run up to FOMC is really going to kind of rule the day here. However, we're not expecting really any surprises out of FOMC, so maybe we do run. It's a really tough call in here, but I like this. This is bullish action, and this is showing us that we're like ready to break out of here. Let's move on to the Qs. And you can see that these have kind of broken out, moved in. Look at this gap from way back here in last August. And we have just closed that gap. I'm just going to leave it there one more time. But you can see we've got some more gaps overhead. We've got this important pivot, which was a 52-week high just above that. And this is all suggesting we move up and test this pivot high. Now, getting through that on the first try, I think is pretty unlikely. But I think this could very well act as a magnet. These levels do tend to act as magnets. And that is definitely one of the important levels. So I would not be surprised at all if by the end of the week we are up at this level. Then we got to decide, are we going to pull back a ways to move, to go higher, or do we go sideways for a couple of days or a week or so and then break through? Like I said, tough call on that, but in the short term, it sure does look like we're going higher here. We had this breakdown. We had this test of a breakdown. It just barely got into the gap. Didn't get anywhere near its 50-day moving average and turned around and went back up. That's very bullish. It's a very bullish sign. All right, let's look at IWM. Obviously, the weak link on all of this. This had a couple of bullish days. And this was a fairly serious breakdown. We got very close to testing lows. And you know, when I did the Wednesday midweek briefing, you know, it was really hard for me to be bullish on this, although I did point out, you know, that we were coming into a support level that really should hold. And I think actually I want to change that. Now that that has been tested again and held, I want to change this to a major support line. I think this 170.50 area, really important. I'm really glad to see it's bounced off of there nicely. Now we do have some declining moving averages just overhead. But, you know, I'd really like to see this get up into this zone here. And if it consolidates, you know, between these two support resistance levels, that's just fine for me. I don't want to see it consolidating down here. We've got to get back up in here and consolidate. And I think we will. Let's look at our volatility index. Look at this, broke below 16. Again, look how far we got to go back. 2021 to see levels below 16. Crazy. It's November of 2021, but still. This is not a VIX level that says, hey, this market is going to fall apart. This is not a VIX level that says, hey, the market is afraid that First Republic is going to be taken over by the FDIC. It's not a market. This is not a VIX level that is saying, hey, the FOMC is going to raise rates, or sorry, we know the FOMC, the Fed is going to raise rates. It's not saying, you know, the Fed is going to keep raising rates a lot. You know, and maybe this is too low. Maybe this should be showing us a little more fear in the market. For now, I'm just gonna, you know, see this as the bullish sign that it is, and go from there. Let's look at our 10-year yield. Okay, this is sort of consolidating sideways above a support level. I guess it's closed this. I want to zoom in a little here. We have definitely closed that gap that opened up earlier in the week, and hit some moving averages there and rolled over a little bit. That's good. This was repricing. It was there was a fair bit of repricing going on in here through the week with some of the economic data. So not surprised to see it swinging around kind of widely here because we were seeing some variance in that economic data. But this should steady right in here, maybe go up a little tiny bit more as we price in 100% probability of a 25 basis point rate hike. All right, let's look at our dollar index, and this has still, whoops, there we go. This is still not broken down out of this head and shoulders top. Maybe it's not going to. You know, if it starts to move up from here, then I guess, you know, we will call this busted. But so far, it still could. You know, we would have expected to see a breakdown on that first try. This is normally what you see with the head and shoulders. But sometimes they just kind of run it out a little bit and then they roll over. This is a weekly, by the way, we're looking at right now. Let's go back to the daily, and you can see that, you know, building a consolidation, building a base in here. So looking kind of bottomy, to be really honest here. But you know, I'm fine with that. It would be really good for equities, and especially global equities, if this did break down and go down further. But consolidation in here is fine as well. That'd be a good second consolation prize. All right, let's take a look at our global ETFs, see how that's doing. So this is the ACWX. This is the all-world index, less the United States. It's looking good, isn't it? You can see that we came up and tested this. I think an all-time high. I'm certain. Oh, not all-time high. No, 52-week high though, right here. Came up recently, tested that, pulled back, but didn't pull back much, and only came back to the 21-day moving average and bounced there. So that's good, strong price action. So, you know, we've got some higher lows in here. We've failed to make a higher high yet, but it certainly looks like we're going to soon. Where am I? Oh yeah, Europe, developed Far East, and Australia. Well, that's going to go higher, right? I mean, look at this. This is strong. This is a nice base here. Breakout imminent. If this doesn't break out within the next day or two, I would be quite surprised. Emerging markets, less China. And this is not looking bad. We have this pennant type, big pennant type formation. I mean, this formation is now almost a year long. Now, some people would say, okay, that formation started as part of a downtrend, therefore the downtrend should continue. And I disagree with that. This formation can also be a reversal formation. And if we look in the context of where this happens in previous price action, if we go back a number of years, we can see a big consolidation zone in there and consolidating again. This big drop was COVID, obviously. We're not expecting that to happen again, so therefore break to the upside, in my opinion, is imminent, but imminent in the context of this is a long-term formation, so it could be another month or two. But the way this bounced here off of all these moving averages didn't go back down to the bottom of the formation, that does suggest a breakout out of this formation is imminent within days or a week at most. So that's our emerging markets. FXI China. This has been quite weak, as I'm sure you know. If you own any of the Chinese ADRs, you've seen them pull back. Found support right at this important support level, as we expected it to, and it's bounced off of there. Now, this should probably, just because it's been kind of unstable, it should probably just go sideways in this range for a little while. Maybe another week or two in there would be okay. If global markets are rallying strongly, though, on the FOMC and Apple earnings and yada yada yada, we will see this go higher and try to break out, maybe even above this old uptrend line that has been broken. All right, that's our global markets. Let's move on to some commodities, starting with gold. All right, got a consolidation going on gold. It's still going on, nothing exciting to see here. This could really go one way or the other, in my opinion. And I really don't have an opinion of which way it goes, unfortunately. GDX. This is a nice tight little consolidation here, but look at that, looks like a bear flag, right? And that suggests that this is going to break to the downside. But you know what they say, from failed moves comes fast moves. So if this does break to the upside, it could go up quickly. So this might be worth it for a play here, this ETF. There's even a GDXU is a triple leveraged version of this. And that might be a fun play, riskier, of course, if this does break to the upside. The upside's not expected, and that's why I think that you'd see a faster move to the upside than if this broke to the downside, because the downside is the expectation out of that pattern. Let's look at silver futures. And again, these, like gold, are consolidating, going sideways. They're doing it on top of a support level, a fairly strong support level, and the 21-day moving average. And look at these, look at these buying wicks on this. So this is very suggestive of this going higher. And if silver starts going higher out of this, then maybe that could drag gold along. So, maybe I shouldn't be quite as bearish on gold as I was thinking at first. Copper. All right, found some support. I mean, this was quite a move down out of here, right? And then found some support right at that pivot level. Important place for that to find support. But we also had, we weren't too concerned, because we had the 200-day moving average just below that and another fairly strong support level. Nonetheless, good to see that find some support there. Oh, this is a very kind of weakish looking move here. So maybe we see some consolidation sideways out of this. All right, let's move on to oil. Oil had quite the pullback. Had a couple little tries, or a try at a move higher. That failed. It moved down some more. It broke a fairly important support level. The apex of this this symmetrical triangle here, this pennant, should have acted as support. You can see it did for a few days, but then we broke down through that. We didn't actually come too far. I'm surprised, actually, it didn't come down to either this level, this 7270 or 7250 level, where you can see there's been previous support. Didn't get there, and it didn't get down to the target that we were looking at on that bear flag. So interesting to see its support there, and bounce on a strong reversal candle on Friday. But will there be follow through? And we've still obviously got lots of resistance overhead with these moving averages and some, some stuff going on there. I guess I can delete this gap out now that it's been fully closed. So it should be an interesting week for oil. Nat gas. Nat gas is starting to look a little more bottomy here. Almost a rounding bottom in here. You see that? Tried to get up through this resistance level. This candle on Friday, though, on that breakout, don't like that much. That pulled back quite a bit. It's closed at about the halfway point on that candle, so that's a little sketch. Yeah, I think this suggests maybe more consolidation is needed here before going higher. But it kind of looks like we may not see any more downside out of this for now. Maybe a little tiny bit of downside down to an area of consolidation, but not another test of these lows. XLE, and this is looking a little more bullish too after some pretty bearish price action. Bounced right where it had to. We've been talking about this level in in a number of videos, but certainly we talked about that on Wednesday. We talked about that in the last weekend's video. And it bounced right there, right where it was supposed to. Technically well behaved. XOP, the oil producers, didn't quite get down to the support before it bounced. Good candle there on Friday, but a lot of resistance here. OIH, oil services. Same sort of idea here. Good bounce on Friday, but coming into strong resistance. TAN, the most volatile of all of these. Look at this. We can see that earlier in the week. Big gap down. That was on NFA's earnings. So massive gap down. Continued to fall a little bit into Friday, and on Friday it was for Solar's earnings, or I think First Solar was the Thursday after the close. But look at this reversal candle here. This is really nice. Strong reversal candle right off the top of a way old gap. Looks like it wants to come back into here. This kind of sets you up for a play in this space, and I want you to look at some of the other candles that look just like this after fairly decent moves down. Okay, so let's back up here. Look at this one right here. Let me get my little highlighter here. Where was I? There it is. So there's one there after kind of a gappy, volatile move down. Had a little bit of move up out of there. We've got another one right here after a long move down. And gaps down below, and then look at the move that had after that candle. We have another over here. After move down, nice big move up on that kind of hammer candle. Now, you can see on this hammer we had good volume. On this hammer we had pretty decent volume. On this hammer here, volume's not so great, so we want to be cautious with this. But I think it's worth a shot. If you're fairly risk adverse and you're good at managing your risk, I've got some plays for you later in the video. All right, let's look at XLY. There we go. XLY was looking a little scary earlier in the week. Fell out of this upward channel, but it's retaken it. Actually, let me extend that out a little bit because it's retaken it. Yeah, it fell out of there, retook it, but we're still now in what is, turning into a bit of a sideways consolidation. Do we move up and out of that, or do we continue to go sideways? And I think the jury's going to be out for a couple of days on that. XLI Industrials. These were also looking pretty sketchy, but found support on right where it should on Wednesday, kind of on Wednesday, right where it should, right at that support resistance level and just above the 200-day moving average. Moved right back up into what has been a fairly important support resistance level. But this does look like it wants to go higher, but I don't know. I think maybe, one more day, once you get up into these highs here, that's what's going to tell us what's going to happen with this one. If it can just get through those without, like they're not even there, then I think we go and see, we test these 52-week highs here. XLF Financials. Okay, so in a week where, there was a lot of fear going on with First Republic, and we'll look at that in a sec. Financials didn't do too bad. They had the pullback along with everything else, but they also had the really nice recovery here. And again, right where they should have, right? I mean, look at, we had that basing pattern from before, and that's where we bounced. Now, we stalled out on Friday right at the 50-day moving average, so that's, that's a tick mark into the bearish column. But I think that these two candles here and this reversal trumps that. I think we're going to continue to see this higher. Watch out for this pivot right here. Let's get that in there. Got that pivot right there to watch out for and a move up. So this could be interesting. Now let's take a look at KRE. This is the regional bank ETF. This was scary. When this broke down through this level, that got a little scary there. We had the close below it. Then we had yet another close below it on a very indecisive doji candle. And all that stuff going on with First Republic. That did not bode well for this. This could easily have broken down, become quite serious. Thankfully, we went up on Thursday. Kind of got right onto the top of that resistance zone. Check one, that's good. And check two, and another bullish sign. Nice strong day on Friday. Close this gap. Let's get rid of that gap now. This really feels like it's going to shrug this First Republic thing off and move higher. All right, so what about First Republic? So the latest word on this is that First Republic is going to be taken over by FDIC. FDIC is looking at a couple of other banks to come in and buy their assets, and they've got a pretty hefty book of assets still. It's not a complete disaster here, but they seem unable to come up with the amount of cash they need to continue their operations, unfortunately. So it looks like by Monday, or even by later today, I'm recording this on Sunday, of course, it looks like this bank will fail, and it's quite possible. I'm not sure what's going to happen. I guess, I'm not sure if, if they are failing, if the FDIC takes over, the stock will most likely be halted for the open on Monday, and who knows when it's going to reopen, if it's going to reopen. There's still a lot of, fair bit of value here. What's the market cap? $642 million market cap in this. Their book value is apparently higher than this. Not sure what's going to happen to the stock just yet. If you're in this, just follow the news. Yeah, it'll be interesting to see how this plays out. But is this going to scare the market? And I think that this is kind of what the market has been expecting now. I think it scared the market at first, earlier in the week, after their earnings, when things got quite negative again. But I think the market has shrugged this off. I think the market expects this to fail. I think there may be a little bit of downside, when it becomes reality, but I don't think that's going to last long. And I think there's going to be a strong bounce off of this. This is one of those things, how they say buy the news. buy the rumor, sell the news. In a short situation like this, it's sell the rumor, buy the news. And I think that's what we're going to see happen here. So there you go. That's all of that. Okay. XLV Healthcare. Liking the recovery in this. Did not like that big gap down. That gap is now pretty much closed. But we have come up into what has been in the past a fairly important support resistance level. Maybe we need to consolidate there. Maybe we go a little higher and consolidate. It'd be nice if we got above it and then consolidated. And then, you know, maybe after FOMC broke out of there. But good recovery here, right off the 200-day moving average. I expect to see more upside out of this one. XBI Biotech. And we had been building a nice base after breaking out the upside of the channel. That didn't last. We came down, briefly broke out the downside of the channel, and have moved back into the channel. That's good to see. That's important. We should expect more upside here. XLRE REITs, those are pretty much just going sideways, so not much to see. You know, could be ready to break out, but I don't know. These aren't exciting enough for me to play. XLP Staples, these were grinding higher, so I guess the risk-off crowd is moving into Staples, but coming into fairly... I'm going to adjust this resistance level, actually. I think that's starting to make more sense. Yeah. Right, at a resistance level. Is this going to break through, or does it need more sideways time? The uptrend in this is pretty strong, so it suggests that this does break through. XLU Utilities, these were just grinding sideways as well, so not much to see there. Let's take a look at technology. All right, technology about to break out of a pivot, or is it going to fail at this level again? I think this time we do see a breakout. Of course, that's probably all up to Apple. But Apple's 4 days away, right? So this has definitely got time to break out before that. Although I would suggest, though, that if Apple starts to pull back, this will pull back as well. But no reason to believe this won't break out to the upside. XLC Communications. This one sitting right at a breakout level, looking like it wants to go. And usually you hear me talking about how when these make big moves into these levels, I don't like it. I prefer they go sideways. I don't know why I feel differently about it this time. Maybe because so many of them. We've seen this sort of pattern in so many different places. It just feels like, and I hate going on feel, but it just feels like this is gonna go. SMH, semiconductors. All right, nice turn here, nice hammer candle. Volume okay, so average volume, which is good because we've seen a lot of below average volume. So I mean, this is almost in a much shorter term. By the way, this green line is 50-day moving average, so in a shorter term, this would be above average volume. Nice move here off that hammer candle, but has come into a bit of a resistance level. If the market's going, this will go though. Let's take a look at our FAANGs. We'll start with Meta. Look at that massive earnings gap. All right, we got a couple little after that massive earnings gap, a couple little indecisive doji candles. Not really too surprising. Still above this trend line though. I kind of think though that this kind of needs to go sideways for a couple of more days. I think that would be the healthiest thing for it. Maybe 2 days, and then maybe make it another little up leg and start grinding higher to the upside. What you don't want to see is this to start closing this gap though. That would not be ideal. If it did, the first place you're going to look for support is this pivot right here. Actually, why don't I draw you in for that for you guys? It's I think at about 222. Yeah, pretty much bang on 222. Okay, that was Meta. Let's take a look at Apple. So what does the chart tell us about upcoming earnings? Well, the chart's telling us that market expect these earnings to be good. On the pullback, it did pull back a little bit, not that much. Found support right at the 21-day moving average and moved right back into, and tried to repair this trend line that it broke through. Now, it stopped right at this old gap back here. This old gap that was mostly closed. Stopped right there on Friday. But this is showing us expect more upside on this. Now, if this starts going up too much, kind of sets us up for failure, doesn't it? If it goes up too much before earnings on Thursday. So that is something to watch out for. Let's hope that Apple can be well behaved here. And like I mentioned earlier, as goes Apple here, I think goes the market. If the market doesn't like their earnings, Apple's going to come down hard, and the market will come down hard with it. If the market likes what it hears, then we're going to see some rally. All right, Amazon. So Amazon had a kind of a weird response to their earnings. I should probably show you the intraday on that one. So here we go. We're looking at a 5-minute intraday chart. And you can see the big green candle is obviously where Amazon reported their earnings. And then fairly soon had some pullback. And then we got into the earnings call. That's kind of where it fell off a cliff when they started talking about AWS. They were seeing some slowdown there, or expecting to see some slowdown there. And AWS is where they make all their money, right? So that's why it kind of fell off a cliff. And that, I thought that was going to get pretty ugly for markets. But markets managed to recover from that and have a strong day on Friday. Amazon didn't really recover from that. So markets didn't really need Amazon, to stage their recovery. Which I think, that's good. That sort of bodes well. It gives a little more depth to markets overall, although it was a week where the markets didn't have much depth. Breadth was not awesome this past week, because most of the gains we saw came from mega cap tech. Let's take a look at Netflix. We'll go back to the daily here, and you can see Netflix just sort of, going sideways, not looking too exciting, right under that really important support and resistance level. Google also going sideways. After hearing Google's earnings and just how, I don't know. They've got to get this AI thing figured out, or they're in trouble. I think that, I think this resistance here is going to continue to act as resistance. I think we need to hear something else out of this company for us to move up to the next level. I think there's better places to play than this. I could be wrong. Some people will see a nice cup and handle here and think that a breakout from this is going to do wonderful things. If this breaks out on some sort of company news where, I don't know. They just need to come out with something impressive, I think, or we're destined for more sideways. Microsoft, on the other hand, is just firing on all cylinders, aren't they? They look at this massive earnings gap here, and then gap and go. One indecisive day, and big green candle. Another decent green candle to follow that up. Volume is starting to trail off a little bit. You'd expect that, right? So I think that this is going to need to consolidate sometime soon. Let's back up a little bit. We can see that this 316 level here is a no-brainer area where this should probably find resistance. What I don't want to see is maybe another big green candle up into there and then a big green candle following that. I'd rather see maybe a couple of smaller candles into here and then sideways for a week or so and then break out above that. Nice moves here for Microsoft. Tesla, there is nothing bullish about this chart. The only thing bullish about this chart is that it didn't totally fill this gap, found some resistance, found some support right around this 150 level and managed to bounce a little bit. There's so much resistance overhead here. Things are not looking good for Tesla. This is when you go back here and look at it like this, I mean, you just see a big rounding top here, and that's just so bearish. Yeah, I can't do it. I cannot be bullish on Tesla. I'm sorry. I apologize. The technicals are just looking nasty. So if you're in this, be careful. All right, let's look at some of the plays we're looking at. HIMS. All right, coming up into a resistance level. No surprise, it didn't go through that on the first time. Pulled back a little bit, gone up to it again. They've got earnings in a few days. Is that Friday or next Monday? I think it's next Monday. A week from Monday. Getting a little choppy in here, not too surprising. You know, seeing this has come up and tried to get through, couldn't, come up again. I suspect we chop through here for the rest of the week. And if earnings are good, breakout, and it'll be a big breakout. If earnings are bad, it's going to big move back down to probably the bottom of this, maybe the top of that consolidation, probably more likely the bottom of that consolidation. Really important earnings coming here. Let's just draw in where I think it's going to base for the next week or so. It's going to be something like that, and we'll see where it goes from there. Let's take a look at ARLO. So, you know, a lot of the setups that we've been looking at lately have broken out as expected and then failed instantly. That's really unfortunate, and that's the kind of market it's been lately, right? And we know this. We know that these plays are risky and dangerous, and that's why we have been taking profit really quickly on these. Look at, I mean, no surprise if you lost money on this ARLO one, because this turnaround and happened so fast, right? You know, the next day it gapped down a little bit and just started going down. But if you see that, you see the little gap down, and if as soon as it starts to continue to sell off a little bit, boom, get out of there, because we've seen so many failed breakouts. OCUL, Ocular Therapeutics, another one with that kind of price action. Now this is a little bit more interesting now. This gives ammo to the to the people. Let me draw a line in here. To the traders who like to buy after it's pulled back after the breakout. Here's your ammo for your case on that. I'm not one of those traders. I think you missed too many decent plays trying to do that. I'm definitely in the camp of the train should not return to the station. If it returns to the station, there's something wrong with the train. But this is a nice move for you if you're that kind of player, and hopefully you bought it there. Let's see what happens when it gets back up to this level, though. I think that we come up back up into this level, maybe go sideways for a couple of days, then break out, then maybe there's a play. So this might be worth keeping an eye on. All right, so that's everything we've previously looked at. Let's go into our new holdings. Now, we're going to start with Mara. Obviously this is crypto related. This is a very volatile stock. You can see 11% average daily range on this. Okay, so this is not for the faint-hearted. This is a risky stock. You've got to have a really wide stop. So therefore, you've got to play it really small. Now, you can see that after going up, pulling back, looking fairly bearish here, it found some support. It got back above that 200-day moving average, and it's consolidated for 3 days. And this is a fairly tight consolidation for this stock. Yeah, it's 13% wide, but that is a tight consolidation for this stock. And it's kind of set us up. It's really defined risk reward for us. So, get that out of the way. It's giving you a couple of ways to play it, right? You could wait and see if maybe there's one more tag like there was in the last couple of days on that 21-day moving average and the 200-day moving average. And this little support resistance level right there. I don't think that's going to happen. I think that crypto is or was up as I last looked. Yes, it is. Let's take a look at Bitcoin just for fun. And there we go. You can see that Bitcoin is making a nice bull flag here, right at an important resistance level that goes way back in time. This one here, really important level this is at right now. So we could see, potentially going to see a big move out of Bitcoin. If this can break out of here, if this starts to break out and it's giving us enough suggestion that it's going to, then Mara is going to gap up tomorrow if Bitcoin keeps going. So you got to kind of trigger off cryptos. If you get a gap up because crypto is moving, then I think you just got to buy the gap. You got to hold your nose, buy the gap, and then obviously you've got, where's your stop go? Well, it goes below these levels. Or you watch crypto and you key off of that, because the two, they are very highly correlated. But there you go. Well-defined risk reward, the potential for a big move. So if you're a risk-adverse kind of player with good risk management, this is a nice trade for you. ENPH is our next one. We talked about solars and how we could see a nice move here. And I think this has pretty decent potential. I also think it's very, very high risk. And it's also a volatile stock. And you can see that volatility playing out here on this massive earnings gap down and a bit of a gap and go. However, or first thing to be aware, okay, we got almost 6% ATR here. So you've got to remember that. After this gap down and it fell and then it found support right around this 160 level, I know for a fact that people are saying, hey, I should put my stop just below 160. And somebody, I'm not going to name names, but somebody asked me about this, and I said, you know what? If you put a stop below 160, you're going to get wicked out. It just felt like that's too. This sounds terrible, but it's kind of too much of a retail place to put a stop. It's a bit of a no-brainer to put a stop there. Somebody's gonna come and chase those stops. They know there's going to be a bunch of stops there. I think this wick is probably even smaller than it potentially could have been. Although that that was a $4 wick. If we look back in time, it was just a no-brainer to put a stop. Your stop's under 160. I thought it may wick all the way down to 150 even. But I was pretty sure we're going to see a wick, and we did. However, now this left a really nice hammer candle behind, and we saw the same hammer candle in the TAN ETF, the solar ETF. So now your risk is defined on this, isn't it? You play the breakout from the top of that hammer candle, or maybe you wait and play the breakout from the top of that candle on Thursday. I think the hammer candle is better. And then obviously your stop just below that. And again, it's a risky place to put a stop because it's kind of obvious. But, maybe you don't even let it get all the way down there. If this starts to turn against you, you just find somewhere intraday to stop out on this. I think is probably the best way to play a stop. Because this should really just go. And it should go at least up until this gap. So that's a $16 move, or well, I guess not quite 16, $14 move to this gap. That's a nice little move. That's almost 10%, and that could happen in a day. And the next one, almost identical to this, except a much better chart setup over the longer term on this one, is for solar. Now they reported on I think it was Thursday after the close. They had a big gap down as well, and they had a massive hammer candle here. Really nice reversal on day one out of those earnings. So that's pretty cool, and you've got the good volume on it. So same idea here, right? You play the breakout at the top of this hammer candle as you start going in and closing this gap. You play it up either to this trend line or the close of the gap. That's an $18 move. That is a 10% move. So there's a lot of potential in this one. And this is probably the safer play because this has been in a long-term uptrend. Nasty move down, but, technically this is a fairly well risk-defined trade. And again, you don't have to stop out way down here. I think that you can find an intraday stop if this moves up a little bit, gets you in, starts to roll over. Maybe look to the intraday on Friday's candle and see if there's somewhere there to stop out. Look at this level right here. You could stop out just below that. That's really nicely risk defined. Level below that, you could go VWAP. Look at a 2-day VWAP, or maybe somewhere in this consolidation might be sort of your last line in the sand. But I think this is a strong enough level right here to really define your risk really tightly on that play. So what is that level? That's like 180. Yeah, that's just below 180. That's where I'd be stopping out if I do decide to play this. So there you have it. That is all the charts we've got to look at today. Some interesting plays, high risk plays though. Everything is kind of high risk right now, but I think these ones are these riskier plays that I've showed you have much better reward potential than some of the regular breakouts we've been looking at lately. All right, let's move on to see what we got coming up the rest of the week or month. You can see that we have Ticker Talk again on Wednesday for our members. These are fun sessions where our members come in and we talk about the charts that they want to look at. So if you want to join us in the Discord, check out the link below in the description. And thank you for everybody for coming out and making it this far. Hit that like button, share, and subscribe. It really helps us out. Have a great week, everybody, and we'll see you on the midweek video.